Hello and welcome to our lender panel discussion. Now, during the event today and over the next few days, you'll hear from a wide range of lenders dedicated to different parts of the specialist market. So for this panel discussion, we thought it would be useful to hear from a different type of provider, namely mutual building societies. While they don't call themselves specialist, of course, some of the UK societies have in fact been catering for specialist niches for many years and continue to do so in innovative fashion. Here to discuss what some of them have to offer, I'm delighted to be joined by Harinder Chohan, Mortgage and Housing Policy Manager at the Building Societies Association, Tony Hall, Head of Mortgage Sales at Saffron Building Society, Dick Jenkins, Chair of Buckinghamshire Building Society, and Caroline Shard, who is Business Development Manager at Vernon Building Society. Hi everyone, and thanks for taking part today. I'd like to kick off with a broad question, if I may, and that is simply, why are mutual building societies better placed than larger PLCs to cater more for the needs of borrowers in specialist areas? And I'd like to put that question first to Harinder, please.
There's a number of reasons, and I'm sure my colleagues will touch on in more detail. I think the obvious one, I guess, is accumulated skills in manual underwriting, which they've built up by working in these niche areas, becoming sort of experts in them particular areas. I guess, as you know, my background is high street banks. They tend to work off looking at vanilla mortgages, more automated processes. And I think the cost of bringing in manual underwriting for specific cases versus the amount of cases they might get potentially might put off some of the larger lenders. So I guess the societies then can work on utilising their skills in underwriting to kind of favour these areas and be confident from a credit risk perspective. And I think the other thing, before I hand over to colleagues, really is I think regional societies, some of the smaller societies still retain a really close relationship with the local community, and they really understand the local market really, really well. So you might see innovation in products to fulfill local needs, which is quite specific. And I guess if you look in more on a national basis, that might be missed. So often it's that local knowledge which helps drive innovation as well.
Thanks, Harinder. Ask the same question to Dick, please.
Yes, I think Harinder's touched on the key point, actually, that the larger lenders, the big mainstream lenders, tend to focus on a factory process where they can effectively put the cases through credit scoring models. And the truth is, although some specialist mortgages actually fit those kinds of models, the truth is many of them don't. And this is where you actually need bespoke underwriters, people who have probably got a few years experience on their shoulders and a few grey hairs on the top of their head, to be able to sort of pick the wheat from the chaff, as it were, and understand cases, as it were, without really a credit scoring dynamic. So what's really happening is that big lenders control their underwriters through strict policies and processes, and smaller lenders basically work in that part of the marketplace where they trust their underwriters. Their underwriters have discretion and capability, which obviously has dwindled in the market in the general sense, but is still very much alive and kicking with smaller lenders. And that's why smaller lenders really are working very well in this space. If you want something complex or intricate, you're probably best to go to a smaller lender.
Which specialist niches would you say mutuals are particularly good at servicing? Caroline?
Yeah, so I think as a smaller lender, it gives us the ability to be more diverse. As Dick said before, our underwriters are there to kind of use a common sense view. So there are systems in place, but it's very much that we have trust in our underwriters to make the right decisions. I would probably say lending streams, particularly at the moment, self-employed is a key one for us, where, they come in all different shapes and sizes. We have the ability and the experience really to kind of navigate through those complexities. Again, probably much of our lending streams are like that. So lending into retirement, joint borrower sole proprietors, contact worked is. So, it just gives us the ability to have more of a common sense approach, probably more than what high street banks do, as they are quite automated.
Thanks for that. Tony, same question, please.
Yeah, I think there's a common theme to the answers already around, areas that take a bit more consideration and a common sense approach. And, as both Dick and Harinder have talked about, that's what we do best. So, Caroline's probably covered off most of my list already, but other areas that I would add in would be self-build. Specialist lenders, particularly building societies, are very strong in this area. And any kind of complex income, anything that, multiple income streams that, as Dick said, don't meet the formulaic model of a high street lender, multiple sources of income that a human being with experience can look at. So that anything like that is where we kind of shine.
Smaller societies' capacity to raise capital and to lend in certain sectors is more restricted than their PLC counterparts. Does that challenge, or the inability to be complacent, also drive innovation? That to Harinder, please.
It's a great question, and I think another element. I think you talked about raising capital, but the requirement, particularly for smaller societies, to hold higher levels of capital as well, can be an inhibitor. And quite challenging. What I would say is, I guess in this market, you'd have to be innovative anyway, particularly if you're not competing on price. So I think innovation would always have to be there. I think, as you say in the question, really, smaller lenders, so this will be specialist lenders, this will be outside of building society as well, would always have to push themselves and be innovative. And again, common theme going back to that manual underwriting and serving niches that larger lenders are unable or don't want to play in. I think that's really, really important in a competitive market. So I think, there is that added challenge for mutuals, particularly around capital raising, and then also given the fact that the majority of the capital will be retained earnings, really. So there's a number of challenges, but what I would say is the sector's been remarkable in terms of how it's dealt with that. And mitigation, as we say, is strong underwriting, which meaning generally arrears figures tend to be low, even for organisations working in niche areas, which will be considered by regulators as more risky. But because of the strong underwriting, arrears are still low in their areas. So it's a big plus, and it shows we have to get it right more often than not.
Thanks, Harinder. And Dick, what do you think?
Well, interestingly, most small building societies are extremely well capitalised, actually. So when we're sort of making lending decisions, we're not sitting there thinking, oh, boy, can we afford the capital on this kind of loan? We generally have plenty of capital and in a very good position to support, sort of interesting lending. The reason why we do interesting lending is because it does actually yield a better margin. Because there are higher prices on lending that's not sort of cookie cutter kind of lending. And that actually helps to defray the cost base of small societies. You still have to have all the main functions that you would have in a much larger lender within a small society, and therefore the overheads are relatively high. So the business model fits really well together of interesting lending in a smaller society, and it's a road that's been pursued by many small societies over a number of years very successfully.
Do UK mutuals collaborate sufficiently? Could they share more services or create strategic alliances to evolve the sector? That question first to Caroline, please.
Yeah, so I think we do collaborate very well as it is at the moment. As with anything, there's always room for improvements, and everyone's always looking to do those, as and when they arise. I think with technology ever advancing, that will just make it easier for us to be able to do that as well. I feel that as a mutual, we all have the key objective, as I say, it's become quite apparent in these conversations that the customer's key, the customer service, the relationship with our clients is valuable to us, and that's the same across all mutuals. So we've got that common ground there. I would also say, you know, with the BSA, we have a good combined knowledge through them. So that it enables us to kind of work more aligned together as well. And then probably on a business development kind of level, you know, the smaller building societies, we do have conversations. We have a WhatsApp group where we can share, you know, what's going on with ourselves, what our SLAs are, any issues, any questions. So we all have a common ground that we all want to work together, which I think is really nice in an industry.
Thank you, Caroline. Tony, what are your thoughts?
I think I want to go before Caroline because she keeps taking all my answers. No, just absolutely. I mean, word for word, I agree. I think as a building society sector, we share it. We do support each other. We all have the same common interest in that mutual, not for for our members approach. And again, just to I suppose just to confirm that I think there is more we could do together in that strength. But Caroline's mentioned about the WhatsApp groups and those informal kind of sessions that really do make the difference, because out of those becomes a better outcome for a customer somewhere. And that's what this is all about. So yeah, I think that's I won't say any more because I'm just repeating what Caroline said.
Thank you. So
may I chip in there, Paula, and also say that I think that generally many of the small building societies tend to have sort of a regional footprint, which means that actually we're not necessarily competing for the same business. So that actually is an encouragement for us to cooperate, learn best practice from each other, and therefore to advance our own skills and market knowledge. And we see ourselves really as up against the big banks, I suppose, and not necessarily in direct and fierce competition with each other. Of course, other building societies are competitive, but we've got far more to learn from each other than by basically keeping it all to ourselves.
Thinking in particular of our recent experiences, how did building societies adapt to the lockdown crisis? And I'll ask that first to Tony, please.
Thank you. So, I think from this necessity has driven much needed change, certainly, from my experience. So, we've moved in the pandemic to non-physical valuations. So we started looking at, digital methods for valuing houses because we had to. So that's now allowing us to think broader as to how we can build that into our everyday life, not just in a pandemic situation. We also far more acceptance of electronic ID and documentation. So the demands for customers to provide paper-based evidence is reducing. I think that's been driven from this as well. Flexible working for staff, I can speak obviously from Saffron that all our staff are set up completely to work from home. They have all the systems, all the functionality to not have to come into the office ever again if that was the decision, because we've made that leap. So and I think as well, that's probably the key things for me in what we've learned from this, that you can provide service and the right service from anywhere if you get the right functions in place.
Thank you. And Caroline, please.
Yeah, so I would definitely agree with Tony. We, definitely remote working has been a main thing for us. We were all in the office pre-COVID, and that was just the way it was. Whereas now, the flexibility is definitely there, and hopefully will remain there. I wouldn't say all of it's been fun. Homeschooling's definitely been a bit of an eye opener, but it has been what it is, and I can honestly say I think most building societies has definitely stepped up to the plate on this one. With technologies, just our view on the ever changing life that everyone's got. It's just it's quite nice to see. I think with bigger high street lenders, you know, we found that they removed themselves from the market quite quickly, which gave us the ability to kind of, you know, be there and be consistent for customers, which has been really, really good. I think, you know, changes to customer profiles, people being furloughed, changes of employment. We've got the open-mindedness there, and now along with the technology to make that easier for them as well, I think the customer journey will just be forever changed from now on, which is fantastic. Yeah, I think it just with a smaller mutual, we're just so flexible and we've adapted to what we've had to adapt to, and I think you know, that can only just be praised on every mutual, really.
Thanks, Caroline. And Dick, please.
Well, I'd certainly echo the points that have been raised there, and I think the question now is not so much, you know, how do we respond to the lockdown, but how do we respond to the economic fallout of a series of lockdowns? Because I think we can see that, you know, the economy is going to go into a rough patch for a while, and traditionally in those periods the larger lenders who are looking to their, you know, sort of capital situation tend to sort of draw their horns in, and we've already seen, for example, that many large lenders have cut back on higher LTV lending. I think the real opportunity for us is to continue to be there in the spaces that we do well, and to ensure that our good capital positions enable us to trade right through. And in fact, actually, you know, we see a good recession as a good opportunity in a sense. I mean, clearly, you know, within reason, but we do see it as an opportunity to go forward with a very positive kind of outlook and a positive message for customers.
Thank you. Love the positivity there. Harinder, anything to add to that?
Yeah, I think the guys have covered most of the key areas. The only thing I'd probably add is I guess this has probably been the biggest ever test of operational resilience, and I think the sector's done fantastically well. Branches have generally stayed open, and again, you know, the transfer to working from home is, I wouldn't say seamless. I'm sure there's been lots of bumps on the way, but everybody's been remarkably well. And I think if you look back historically as well, building societies continued to lend through the last crisis, and I think they've been quick again to get up on the higher LTV grounds. And I think again there's an opportunity going forward, as Dick says. I think when we get beyond the stamp duty deadline, you know, you could see a negative impact on the economy potentially. I think in societies, I guess the role is to stay there and continue lending, and the balance sheets, which are strong, as Dick said, which will be a big help really with that. And I think added into the mix, it's been really, really challenging, because you've had obviously the COVID crisis, payment deferrals, number of iterations from the FCA in terms of guidance, which firms have had to deploy and employ in the space of days to get processes up, which has been remarkable. And then on top of that, you've had an unexpectedly buoyant market because of the stamp duty changes. So the sector's done incredibly well. So I think everybody working in the sector has been incredibly proud and how we've done, but not surprised, because given the people that work in the sector.
Some of the main bugbears advisors have expressed with lenders during this year have been slow service and rapid product criteria changes. How are you as lenders approaching these problems? Tony, please.
Yeah, so, you know, we actually as a Saffron have a clear corporate objective to have service that stands out. So we're really shining a spotlight on our service side of our business, because if you look at all of us as societies, our propositions are based on product and criteria and service. Product and criteria can be copied very quickly, as you see that all the time. But the one thing that's truly unique to all of us is how we deliver our proposition and our service. So for us, it's a real focus on ensuring that our service meets the demands of our market. So what have we done? You know, I mentioned it a bit earlier, but we're reducing the requirements for documentary evidence. We are removing unnecessary procedures in our journey from, you know, dip to ultimately completion. We're also growing our relationship team, so we're actually bringing more people on board to help the brokers get to where they need to get to. So it's the real focus for us. And I know, you know, I've seen it, you know, in the press, everybody else is starting to grow their teams again and looking at how they can develop a better service. So, but from us, it's about ensuring that we're easy to do business with. So, and everything that gets in the way, we're trying to remove. You know, we do a lot of broker surveys and feedback, and we do make a lot of changes as a result. So we're trying to adapt constantly to what our brokers demand.
Great. And Caroline?
Yeah, so I would say exactly what Tony said. We're exactly the same. We are growing as well. So BDM, you know, our intermediary team, the underwriting team, the processing team, we've all grown over this year. So that just, as you know, just enables us to get that business done much quicker. What I would say is for us that we found is communication is key. So again, because we're a smaller lender, we have the communication between our processing team, with the underwriting team, with our executive team. So if there are, you know, cases that we can't make that decision ourselves, we've got everybody there around us to be able to give that service that we really need to give to our clients. So with the communication there, and then passing that quick communication on to the brokers, you know, with our SLAs, any changes of criteria, any changes of products, I think that was definitely key for us. And you know, that we can only ever get better, and with the new systems in place, and you know, potentially new websites and things, that just makes it a lot easier for us, and it makes the customer journey better as well.
Thank you. And Dick, particularly on working with the broker community, what have you been doing?
Well, we're 100% at Buckinghamshire focused on brokers, so we try to think broker at every stage. Whilst I totally agree with what Tony and Caroline are saying about the kind of responses we've made to, I suppose, keep brokers front of mind, keep the communication in particular going, I don't think we can shy away from the fact that it has been a difficult year in many ways. You know, valuations have taken longer. You know, searches and certain parts of the process have simply taken longer that are outside of our control. And although we have surprised ourselves by how well we've adapted to home working, I'm going to be honest, it's not as straightforward as actually having everybody in the room talking together. So, you know, I think there are issues that we've had to overcome. I'm actually amazed how we have overcome those issues, but we have really worked very hard to try to keep brokers in mind and recognise some of the problems that brokers have in terms of you know, sort of getting cases through. It's not been an easy time for that, but we've just doubled down and done our absolute best to try and help them, I guess.
Being mindful of time, I'd like to ask the next question to all of you, but ask you for concise answers if you can. With no return to normality in sight for the foreseeable future, what words of advice would you offer advisors looking to protect or even grow their business in the specialist sectors over the next 12 months?
Yeah, I would. My advice would be: don't be blinkered to difficult cases. There will generally be a solution in the market, and you'll find a lot of those within the building society sector because of all the things we've mentioned. I would say really package a case well, tell the story, and if you're not sure about it, speak to us, speak to the BDM, speak to the team, so that you can best place to put your case. And the big focus area for me still is later life. You know, and again, building societies are very well positioned to support in these markets. You know, the UK finance stats, 513,000 interest-only mortgages maturing between now and the end of 2027. And the majority of those customers don't have a plan in place to repay that loan. So the opportunity to support those customers for advisors is huge. So I would just be mindful for that.
Thank you very much. And Carol?
Yeah, so again, pretty much what Tony has said as well. Don't be afraid to use smaller lenders. We might not be as big as the high street lenders, but we know where we fit within the market, and we do it really, really well. So yeah, I would just say, don't, just because of size, don't kind of put us out and think that we won't be able to handle the cases. definitely pick up the phone, speak to the intermediary team. All mutuals have really good BDMs, intermediary teams that, you know, we know our criteria inside out, but we also know the industry. So that there's many a time where we have brokers that would ring with a particular, you know, way that they think that case will go. Retirement mortgages are definitely one of those where they think they might have to have a RIO mortgage, when really once you've had a chat with them, we can get them on a standard product, and that's just through knowledge of our criteria and where we can place it. So I would always say give us a call. That the market's always being competitive, and that's only for our clients' benefit. You know, they're able to go to a lot of different lenders. But as I say, what I would say is that we can look at those more complex cases and have an individual view on you know what the issues are, but also the merits for the clients and the case itself. Thank you. And a brief word, please, from Dick.
I would urge brokers to remember that we're still up for it. In fact, all the more so in the times that we're facing. We recognise there's going to be little bits of impairment around. We recognise that with a sort of focus on staycations, then holiday lets will be interesting and important and an opportunity. We're actually innovative, up for it, and I think you will find most small lenders very excited about actually taking your business and helping you.
Thank you. And just a last word from Harinder, if we may.
Yeah, I was just going to mention holiday lets as well, and looking at trends that in terms of people not traveling abroad. I think the other thing which nobody's touched on is retaining business. I think add value. So don't wait for sort of 3 months before the deal expires to get in touch with your clients. I think those who've been in contact with their clients during the pandemic have probably scored a lot of brownie points and have also supported customers through difficult times, maybe giving them a bit of guidance around payment deferrals and different support mechanisms. So add value and stay in contact with your clients, not only when their deals are expiring.
That's it from our panel today. Thank you very much indeed to all our panelists. Thank you for watching, and goodbye.